Hey, this is Brent from Wolf on Wall Street Trade. It is December 22nd, 2018, and I have a daily chart of the S&P 500 with picking up from where I left off on last week's video. So this would be last Friday's close, and we were looking for more downside this week, actually a second leg lower, and I put out a whole bunch of price targets early in the week, Monday. One of them for the S&P 500, a conservative target. Measured move was 24.45. So let's walk this chart forward one day at a time. Here's Monday, Tuesday, Wednesday, Thursday, Friday, and we blew right through the intraday low of the year that a lot of people were looking for support to hold. And the media's had this narrative that it's just a healthy pullback. We're going to test the lows of the year. I'll show you one of the reasons why I haven't really thought that. Here's the S&P 500 and the count of 52-week lows for the NYSE. And you can see this relative trend line or price target around 25.32 for the S&P. So as you can see, the first sell-off of the year in February, the market came back and retested that level, and the 52-week lows contracted. So before we even got to that price level in October, 52-week lows were already expanding. They were already ramping up. And as I was showing last week, by the time we got even close, to the bottom end of this range, it was just, they were huge. And that's not a healthy test of support. So that's how I left last week's video ended. I think we're going lower. And this same thing, I mean, this exact same thing, almost exactly played out in 2007, 2008, going into 2008. I've been showing that on a weekly chart, this analog. It's nearly exact. And there were problems here in the market well before these 52-week lows started expanding. These are 52-week highs. Watch what happens here. I'm going to back this chart up because you probably remember around June I was saying, look, breadth does not look good. Market breadth does not look good. So if you look at the S&P off these 2016 lows and you watch what's happened on this rally, you have 52-week lows or highs rather in yellow here expanding, and then we get into that first sell-off this year and it just never comes back. And you can see down here problems with breadth all year. It really became obvious around June here, but so that's why I thought that support was not going to hold and we're going lower. As for the weekly analog that I've been covering, that has been very similar to 2007, 2008. And I haven't put this out there to say, this is what's going to happen next, but every single week has played out almost exactly the same. This is kind of where we left off last week with the record high in October. The market sold off, came down 1 week, consolidated, came down another week, and then this kind of range here. And the analog to 2018 would be the 200-point range in the S&P over like the last 7-8 weeks, and came down again to test this support around 1406. And what I always say is that markets don't just crash from all-time highs, they crash from perceived support breaking. So on a weekly candle, this was what happened the next week if we roll it forward. And if we look at the same analog currently, it would be here, and this would be last week. Boom. So it's just to say nothing new under the sun, I guess. So coming into this week, I was looking to take profits on my shorts, which was IWM short and QQQ short. Been short IWM this entire way. Took half of it off here and let the rest run. Added that half back in QQQ. And so we have first leg down, second leg down. I put out some targets early this week. I was looking for 132 to 134 in IWM, and you can see it hit that for me on Wednesday. So I took that off, and in QQQ, I was looking for a target at the bottom of this channel in the 151 to 154 range. Got that here Thursday, closed that at the low of the day on Thursday, and took the short off there. Now both of them went down a little bit more. You know what? I'm not too concerned. Left a little meat on the bone. I'm not really worried about it. But when I see a lot of sectors just falling out of downtrends, like I'll give you a couple examples. Regional banks, KRE, And let me just pull up a set of trend lines. There we go. So here's KRE. These regional banks, they led the small caps lower. They rolled over here in September into October. They actually led the entire market higher too at the end of October, and then put in this false or failed breakout, let's call it, and we got a fast reversal. And here's the downtrend. You'll see it on a 60-minute chart. And when it fell out of the bottom of this channel, so it's trading in this downtrend, short the whole time. If you want to swing trade, you know, you're kind of hitting these swings, but these are really short. I mean, you're talking about a day. So when it falls out of that, you know, there's a change in character. People are puking up their positions. A couple other examples would be energy. So energy, you can see here this downtrend, and it falls out of the bottom of that. Retail did the same thing. Here we go. There's the channel. It fell out of the bottom of that. So what this tells me is that there's a change in character. The selling has gotten heavier. It's more or less positions just being puked up and on heavy volume. I want to use that to my advantage. I want to use that to be able to take profits on shorts, to cover those shorts. I see absolutely no reason to be long this market. So, you know, this maybe is like a capitulation event because you can see the selling is really accelerating here. But, you know, maybe capitulation doesn't mean there's a good reason to buy, in my opinion. Also took off a long position in gold, and here is the daily chart. Let me change these trend lines. So we've had two trades in gold. The first one was right here, long, and sold that one right here. And then the second one was right here, opened it here, and got out Thursday right here at 119.25. What's funny about that is when I entered it right here on the 9th of November, 119.25 was the measured move target that I had set. This trend line is from way back there in November, so it hit exactly at that trend line. I had some options that were expiring anyway the next day, so I took those. But gold is acting really well. Now, it got hit really bad earlier this year, fell a lot, and this is kind of a point I think that can be made for the stock market as well, as far as stocks go. It did not just, you know, hit a low and then rally back to new highs or anything. It did a lot of work as far as consolidating here, breaking out, consolidating more, breaking out, consolidating. So I like gold a lot. I'm going to be looking for another entry if it consolidates a little bit more and it keeps acting healthy like it has been. But I don't see any reason whatsoever to be a buyer of stocks at this point. Let the market prove it to you. This is not trying to catch a falling knife. This is trying to catch a falling axe. You know, look at this. Absolutely brutal selling. We have a first leg consolidation, second leg down. Maybe that's it. Maybe it's not. But I see absolutely no reason to be long here. And I don't see any reason to add new shorts. I mean, this last week was about managing positions, managing short positions, taking those off the table, pruning them back. But that doesn't mean I'm bullish by any stretch of the imagination. The only one thing I did see on Friday was the S&P was down something like 2%, and the 10-year yield was just unchanged, which is a little weird, a little odd. Maybe bond traders went home early. They finished up for the holidays. Maybe it had something to do with the government shutdown. Maybe it had something to do with Trump talking about firing Jay Powell. I don't know. It was a little odd. It's something to watch into next week, which is going to be a really thin market, so I'm not going to put too much weight on anything that happens next week. But at this point, you know, I don't see any reason to be a buyer. This is just chasing stock prices and hoping they rally. And it's like I've said on Twitter a couple times, it's like day 50 something of CNBC asking, is this a buy? Is this a buy? Where's the evidence? It's done nothing but go down. You have one big leg down, another big leg down. Maybe it's not a 20% crash because we have circuit breakers, but this is just brutal price action. There's no reason to buy it. So with that, Merry Christmas. Take care. I'll see you next week.